All right, let's get right into it. So, you're ready to dive into BinanceBot, but you're probably wondering, where on earth do I start? Well, you've come to the right place. In this guide, we're going to cut through all the noise and give you a super clear roadmap for picking your very first trading strategy. And, just as importantly, dialing in those essential settings to get you started on the right foot safely. So, let's kick things off with the big question, right? Why even bother with a trading bot? I mean, what's the point? It really boils down to one single massive advantage. The bot's analytical power is just on a completely different level than any human trader, period. And when I say a different level, I mean, look at this. The difference is just staggering. You know, a really skilled human trader, they might be able to keep an eye on, maybe 10 charts at once? This bot is scanning 500 pairs. A person reacts in a few seconds, which feels fast, right? The bot reacts in a tenth of a second. And the biggest one? We get tired. We get emotional. FOMO, panic selling. The bot, it just runs on pure, cold, relentless logic, 24/7. And all of that raw power leads to this insane number. We're talking up to 100 times more effective. Why? Because it's doing this huge parallel analysis across the entire market, all at the same time. It's spotting these tiny little opportunities that you or I we'd never even see them. It's like having 100 pairs of eyes working for you constantly.
Okay, so we know why this thing is a beast. Now let's check out the actual tools in its arsenal. BinanceBot gives us 3 core trading strategies to choose from.
First on the list is the pump buy strategy. Think of this one as the sprinter. It's all about speed and momentum. Its entire job is to spot an asset's price suddenly spiking, that big green candle, and jump on board to ride that wave for a quick profit. And then you've got its polar opposite, the pump sell strategy. You know the saying, what goes up must come down, right? Well, that's exactly what this strategy bets on. It waits for that massive pump, that huge price surge, and then it's designed to profit from the pullback, that almost inevitable correction that happens right after. And last but not least, we have the open interest strategy, or OI for short. Now this one's a little more sophisticated. It's not just looking at price action. It's trying to read the room of the market. It analyzes all those derivative contracts to get a feel for the overall market sentiment, identify a big established trend, and then just go with the flow. All right, this brings us to the main event, pump versus open interest. For anyone just starting out, this is the big question. You've got these awesome tools, but which one do you actually pick up first?
Okay, this table lays it all out pretty clearly. You see, the pump strategies are all about reacting to sudden, sharp moves, perfect for a volatile market. The OI strategy, on the other hand, is about following longer, more established trends. But honestly, for a beginner, you can almost ignore everything else and just look at that one row, backtesting. This is the absolute deal breaker.
And here's why. It's a critical limitation. You simply cannot backtest the open interest strategy. It's not the bot's fault. It's because Binance doesn't provide the historical data for it. So you'd have to test it with real-time trading, which is, it's not great when you're just learning the ropes. And for that reason, and that reason alone, our strong recommendation for all new users is to start with a pump strategy. It's just the safer, smarter way to begin.
All right, so you've chosen a pump strategy. Excellent. Now let's get into the really critical part, setting up your first configurations. Think of these as your global safety nets. Getting these right builds the entire foundation for successful trading. Okay, these two right here are your master safety switches. Your global take profit is your lock in the win button. We suggest setting it to about 2 or 3%. Once your whole account is up by that much, the bot just cashes out. Done. Then you've got the global stop loss, which is your emergency brake. Setting this to 5 to 7% means if things go south, the bot cuts your losses to protect your capital. Absolutely crucial.
Now this feature is seriously clever. It's called pause after close. Think about it. After a trade closes for a profit, the price often bounces or corrects a little, right? Well, this pause stops the bot from getting faked out and jumping right back into a bad trade on that little correction. Setting it for, say, 5 to 15 minutes just lets the dust settle. Super smart.
Okay, now for the real key to profitability. This is kind of the bot's secret sauce for making money. It's a function called the order grid, or setka orderów. And here's how this amazing thing works. So, the bot finds an entry point and opens a trade. Right away, it sets your stop loss and take profit to keep you safe. But here's the magic. It also places several extra limit orders further down. It's constantly monitoring everything, and if one of those lower orders gets hit, it automatically adjusts everything else. This is a super sophisticated trading technique called averaging down, and the bot does it all for you automatically.
So what's the whole point of this? It's called position averaging. If the price starts to move against you, the grid strategically buys a little more at a cheaper price, and then maybe a little more if it keeps dropping. Each time, it's lowering your average entry price. This is huge because it means you can get into profit way sooner when the price recovers. You don't even need it to get back to where you first bought in. It's literally designed to turn a potentially losing trade into a winning one.
Okay, you've picked your pump strategy. You've set up your safety nets. You get how the awesome order grid works. We are almost there. But there is one final, non-negotiable, absolutely critical step before you even think about risking real money, and that is testing.
So, how in the world can you know if all these settings you've picked are actually any good without, losing your shirt? Well, lucky for us, the bot has a powerful tool built right in to do exactly that.
And this is it, the backtesting tool. It's super simple. You just pick a period of time from the past, like, say, the last month. Make sure your pump strategy is selected with all your new settings, and you hit that Run Back Test button. The bot then goes back in time, essentially, and trades on the real market data from that period, using your exact strategy.
And once it's running, you click over to the Graph tab, and this is where the magic really happens. You get to watch as the bot draws a chart of how your balance would have grown. It's showing you exactly what would have happened if you were trading live. That nice, steady, upward-sloping line, yeah, that's what we love to see.
But, and this is a really big but, you have to take this warning from the developers to heart. A great backtest is an amazing sign for sure, but it is not a crystal ball. You know the phrase, past performance is not an indicator of future results? It's true here. The real, live market has things like price slippage that a simulation just can't perfectly replicate.
All right, so let's wrap this all up. What are the big takeaways? First, remember the bot's superpower is analyzing hundreds of pairs at once. Second, as a beginner, stick with a pump strategy because you can actually test it. Third, set up your global take profit and stop loss immediately to protect your money. Fourth, let the order grid do its thing to turn trades in your favor. And finally, and most importantly, always backtest before you go live.
So there you have it. You've got a solid playbook for getting started with BinanceBot the right way. You've got the tools, you've got the knowledge, so now the only question left is the one on the screen. What volatile market are you going to unleash this on first? Time to go put this into practice, run some tests, and start your journey.